Hey, everybody, welcome to this week's episode of The Lumber Word, episode 178 on the 12 o'clock on the 13th of August, 2026. Glad everybody got back, except Charles is still wrangling cattle or doing something like that. Had a lot of people call yesterday wondering if we guys are if we quit doing the show. Uh, we got Sig Thoma's on, reoccurring guest. Matt, thanks for getting Sig on, and great thought uh, to talk about a lot of things going on. So I'll just jump in on the market real quick. What we're seeing from our side, um, had good liquidity. We're buying a lot cheaper every day on key items. Uh, Lost a little liquidity today, it seems like, after the CME opened up $15. So all the people that never trade it but only talk about it um, are sitting around kicking tires and asking questions right now. But literally good liquidity up until yesterday. Um, we've got a big discount on the CME, almost $60, and I don't think that means anything because, as Greg always reminds me, that wood nobody's going to see for 2 months. But nonetheless, it's still a big discount. And as we were used to big premiums for 3 years, I think the whole structure of the market has changed slightly. And we're going to see bigger discounts the farther you are out in delivery. And Greg, what does that mean when you see a big discount or big premium?
I mean,
Opportunity.
opportunity is knocking. You
Yeah.
know what they say, buy what's cheap, sell what's expensive.
So,
But it's crazy, actually. I'm looking, it's like, CME's down $100 a thousand in what?
2 weeks.
Yeah.
4 weeks? No, it's like it was 664
3 weeks.
on and you know what? On July 23rd. So we're, 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, 1, 2, 3, 4. Basically like little over 3 weeks.
here's just a few items I was looking at today versus print. 2x4 10-footers. We bought this week $45, $50 under print. 12-footers, $50 under print. 2x4 16s, $40 under print. Greg, 2x4 104 and 5/8. I mean,
We can't even say the number because it's so far below print.
it's so
We can't
far.
even, we can't even say it's too far.
Yeah, how much is that trade off? Over $100 in the last 3 weeks.
Yeah, it's basically the trade's the same as the board. It's down $100.
Yeah, and
But I'm sure that the indexes will accurately reflect all of this. And I just want to say that's the challenge in markets like this is that the indexes lag so much that they do the industry a disservice because it just delays the market clearing, right?
well, it's one of the things where the CME really is more reflective right now of where the market's moving towards, right? But that's what we saw this week. Matt, what about
It's also what happens in supply side markets. If you look at the market, we've been basically up since the low of last November, right? And so, I look at that, and the most interesting thing, Ash, you and I were looking this morning at the boob tube. CNBC had a feature on surging lumber prices.
Yeah, the cryon on the bottom said lumber prices basically. Actually, I don't have to guess. I'll read it because I took a picture in there and sent it to Kyle. And I'm like, Kyle, you got to get back on this show because what are your people over at CNBC doing? It says rising lumber prices add to housing challenge.
Yeah.
Yeah.
That was today at about 9 this morning.
It's like 2% of the cost of building a home.
Yeah. It's between 2 and 5, Matt.
Yeah. But the point is, like, isn't it crazy how when you're in something, this is why I never like talking to people that are experts at something and giving them my opinion, because especially if I don't know anything about it, it kind of shows like these guys have this on the on their show and they're lagging. Just like, there was an article out in the journal last week talking about high lumber prices. And, and I guess they all start writing these weeks before, right?
Yeah.
But
I mean, it's hard to be a real-time accumulator of information with such a giant pile of different SKUs that you'd have to follow. I mean, we just deal in framing lumber. Think about all the specialty lumber and low grade lumber and odd, 4x and 6x and all these different regions that you'd have to accumulate that information from and to know and hope that you're getting accurate information, because producers have agendas, wholesalers have agendas, retailers have agendas, so you're always going to get it skewed a little bit of the information, and you're not going to get the whole 100% accurate story. It's a difficult job.
One place where there's no agenda is the Lumber Word.
Yeah, so let me tell you what's going on in the
no agenda in the Lumber Word.
I'll give you my no agenda report real quick. Things are a little bit slower around the room at the mothership here. We feel like green narrow prices have bottomed out, and they were the first thing to get cheap. I mentioned that a month ago, 3 weeks ago, that green was really cheap. It got cheaper, but it seems like we found a level on that on the 2x4 and 2x6. So that probably is done going down for now, and we'll, probably go back up a little bit. The dry prices are still relatively high, but that's not going to last when you've got a future sell-off of $100. I don't care what species it is. It's just, if you own a sawmill and you were selling lumber for 600 FOB mill 2 weeks ago, and now the board goes to, what represents 450 mil Canada, you're not going to be selling at 600 mil anymore for dry dug fir. You're going to have to take less. And so all the Western mills, all the Eastern mills, all the Canadian mills, all the yellow pine mills, other than if Charles was here, he could give us the real up to the minute info. But if you're a mill in North America, you're listening. You have to. Your main problems probably are mostly 2x4. It seems to be the item that everybody's staring at and people need to buy, but they're all holding back and waiting and filling in on trucks. The 2x6 is still spicy.
Who needs to buy, Matt? Who needs to buy?
My customers do. I don't need to do anything. I have choices, right? But I'm running low. I'm running low on inventory.
I guess I just look at the customers and I go, okay, so there was a rally into summer shutdowns, et cetera, blah blah blah, from June into July, where the end users probably beefed their inventory up a little bit. And now that's coming out. I have the sense that, business has slowed a little bit out there. And so that I'm bringing a question. Do they quote unquote need to buy? Is like, what does that mean? I just don't understand,
it depends on your perspective and your agenda, right? If your agenda is to keep your inventories low for the rest of the year and keep churning inventory, which has sort of been the plan all year for most of the big retailers. They just buy what they need, move on, and rinse and repeat next week. Well, they're not going to stop doing that. And based on the percentage of orders I'm getting,
so then you're saying they don't need to buy, right?
No, but the guys that supply them do. I'm running low, I have half as much inventory, and it's dropping like a rock. And here's the one thing that's changed in the last 2 weeks. 2 weeks ago, I was getting half the orders I quoted on trucks because other guys were getting out of their stuff they own. They were harvesting profits. They were just getting squeamish about August, and they started doing what you guys did, selling more wood than you were buying, right? We all did that. Well, I wasn't getting all the orders. I was getting half of them or less. And that meant that somebody was undercutting me, or they had something a little bit fancier or nicer than I had. Now I'm getting all the orders I quote. So that means that all the guys that were cheap and be busy 2 weeks ago, they've done their deal. They're done. They don't have any more wood they just have to take naked shorts now. And I don't think you want to take naked shorts after $100 sell-off, right? I really don't. So I do think that the field inventories at the wholesale level have been thinned out quite a bit. I know that's true because I see my reports, and I'm sure that I'm not alone, right? I bet your inventory is down a little bit. You too.
We consciously reduced. We had as we told everybody on the pod for the longest time. We had an all-in, full-in inventory position, and that was pretty much the case until the 4th of July. And we sold in the month of July. July was probably our best sales and billing month since COVID, and our inventories was down 50% in the month of July. And part of that was, Ash and I were talking, well, nobody's really offering us anything because they were going into shutdowns, right? We're heavy to the
we weren't getting offered anything really.
We weren't getting offered anything, so we just sold.
Thank
right?
God we weren't.
And
Hey,
I don't think we bought more than we sold
Sig,
this week. But
Sig, what you had? Sig had some input.
I got one important thing just to share. I saw a company that buys 36,000 truckloads a year of lumber. Okay, not OSB, just lumber. And their sheds were empty last week. And I mean, to the point where some of those sheds hold, I don't know, maybe 800-900 units of lumber, and they had 2 units sitting in the shed.
Why are they going out of business or what?
No, I'm just telling you.
But I'm just saying is if you buy that many trucks, I mean, either you're in the business or you're out of the business. If you only have 2 units, you're out of business. So it's a non-factor. You're out of business.
Guys, no. Trust me, no.
I got a guy that has to. I had dinner with a guy last week that's a customer of mine, and he's got he buys the lumber, waits a week or two for it to ship to his reload. Then it takes another couple weeks to get it treated. Then it takes another couple weeks to send it to his final destination where they actually consume the lumber, right? So he's got a 6 to 8 week lead time between the day he issues a PO and the day that wood arrives in his inventory at the yards. And he told me he was down to 60 days worth of inventory. And I said, well, you have no inventory. He goes, yeah, I need to buy. Well, this was a week and a half ago. He finally bought something yesterday. It took him another 8 business days to make that decision to go ahead and buy some stuff. And it wasn't until I told him, hey, the stuff you're buying is starting to bottom out. You might want to buy it now. So, this guy's a veteran. He's been doing this for 40 years. He knows what he's doing. He knows where all the bodies are buried. And he is emblematic of our industry right now. It's the summer. Everybody's watching the board. Everybody's sitting there doing nothing, thinking like, oh, this will just keep going down forever. Guess what? It's not going to go down forever. And if you're a value hunter, you ought to be buying that board right now.
Yeah, I would
just take delivery on it.
I was just making that example, Greg, of an operating company that highly speculates in southern yellow pine up and down. And they, when Memorial Day hits, they want to head south with their inventory. And when Labor Day hits, they want to have the sheds full. So it's a market trade. It's not a going out of business or anything else. No.
I mean, I'm just saying is if you're in the yellow pine business, right now, I mean, you want to be buying and be willing to buy more. I mean, we're back down on yellow pine prices. We don't have our yellow pine guru on today, but we're back down approaching the numbers that we were last fall, where we told people that, hey, you should buy this. And, I remember 2x6s, they're sub $300 FOB mill. We said you should load the boat, and that price doubled in the next 6 months. Maybe it's a week early, maybe not, but we'll have to get Charles on and talk about the production numbers, because these numbers are back down where mills are going to be losing money making yellow pine.
Unless it's like
they're still losing money making spruce right now. I think U.S. West is the only region that's making any money.
Unless it's like the title you were talking, Greg. Are we in 2008 again? Where?
Oh yeah, let's talk about that.
If that's let's go first of all to OSB. Sig, OSB, like we've never gotten any feedback on OSB. What's going on with OSB?
Yeah, just feedback on yellow pine. Break even's roughly 400. Okay, depending on the mill and how much debt they have and all that. So yellow pine is still making money. It shows by Interfor profits and other people's profits, West Fraser, etc. They're making money in yellow pine. They're losing their butts in spruce. I mean, spruce break even is 700 if you count the duties and everything else. And, they're trying to sell at 500 if you want to use round numbers. So, spruce is detrimental to them, but they make enough money in yellow pine to make up for the losses. Yeah, OSB, generally speaking, we have some situations going on that the buyer needs to be aware of. There's plenty of OSB in the South in United States, but Canada, with these new tariff talks of another 14%, I believe, okay, don't hold me to that some of the mills have either shut down or are not quoting out of Canada, trying to stay as much as possible inside Canada. So we have two markets, and the West Coast doesn't like Southern Yellow Pine OSB. So they get usually fed from Canada, but they can't get any from Canada right now because they're not quoting because of the export import tariff situation. So that's the OSB market. So you can buy trucks in the South for $200 or less, not much less. And in the West, you have to pay almost close to $350 to buy that same product on trucks. So that's the situation in OSB. They don't have big order files. It's business as usual, but it's not good business. They have to take counters, all that stuff. So that's one of the problems. And then, of course, we got trucking on top of it, right? That makes it difficult. But that's the OSB rundown. Flooring is really bad as far as pricing goes. 23, 30 seconds tongue and groove is around $400 to $500 regionally speaking, depending on where the mill is and how much you have to pay for trucking. And then also there's a plant being built in Alabama by a foreign entity, and I heard that they stalled all the project completely till further notice because these guys are all bleeding in Europe and here, and therefore they can't finance these projects. There's a couple other U.S. mills that stopped their projects, big ones, because they're just running out of money. They can't afford to lose money in their daily operations and then lose money on top of or give out money to fulfill the projects.
Yeah,
that's it in OSB.
What's going on up there in Eastern Spruce and Euro type stuff, guys?
No, I mean, go ahead, Ash.
I mean, I can like Euro. We've got vessels hitting in the next 2 weeks. I'm beginning to think it was hard for some of these buyers of Euro to price it. And I'm wondering if some of them did. There's some Euro buyers that just take a number and then tell the mill what they sold at. It'll be interesting to see how much comes out, how much is coming in, and what it is, what the price is. But the vessel,
the market was lean. The on-ground inventory at the ports for late June and July was very, very low. The higher prices led them to load up a little bit more wood that's going to be hitting here in the next over the next 30 to 45 days, I believe. We'll get a better update. We got a call with a couple people tomorrow, and so we'll have a little bit better sense on that. But they react quickly, and now the price is adjusting back down. Now I can tell you that at least one of our suppliers isn't going to ship at the numbers that we're at now. In the East, Matt, has come. It always surprises me, even though I know how quickly some of these prices can adjust. And in particular, we were in a supply push market, not a demand pull, and so you lose a little bit of liquidity, and that's all that it really takes.
Yeah.
So the calendar's not really that favorable for the market right here. At best, you get a little bit of a dead cat bounce into Labor Day, and then be interesting to see how mills play a lower tariff in October. But I want to get back to the Sig, saying the pines were making money. Midweek prices, the index price is close to $400, and from everything we understand is they're trading at significant discounts to that. So they were making money, but Now, new business, they're not
Yeah,
making
well,
money.
that's a good point, Greg.
And you know, and the other thing that I commented on last week, which is still in effect right now, is the historic premium that U.S. West is to spruce.
Yeah.
I mean, you know, you think about it. A year ago, Matt, we were delivering hem fir on the futures contract, and you know, today it's trading, I don't know, $100 over the board.
Not really.
What's
I mean-
the market price of Coast Hem Fir delivered Chicago today?
Depends on the tally, but somewhere between 615 and 650 Chicago. It's all tally dependent. Like, you know,
650 to 650. I can drive a Mack truck through that spread.
So like if the futures
Yeah,
delivery
but
tally,
I mean,
a futures
the cash
delivery
market-
Just a good normal, random, not a jammy tally. It's just a good normal random. It's
probably
like that
620.
like so
615.
620 on that futures delivery tally.
620. So then it's only a $60 premium to the board.
Well, there you go. Buy the board and sell the cash, right? I mean, it doesn't take
No,
a
that's
rocket
that's
scientist
actually
to
not-
figure this out. But here, this leads me to a point I wanted to discuss this. I had a really interesting conversation with a couple of sawmill owners out west here week and a half ago. Yeah, 2 weeks ago. And it became obvious to me that they didn't understand the new futures contract at all. Now, this is
Shocking.
well, these are guys that they're no dummies, and they have shipped the board before. So back in the late 90s, early 2000s, you could ship Western species on the car contract.
Yeah.
They put a kibosh on that sometime in the early 2000s, and they made a line across the top of the Cascade Mountain Range and said anything west of here you can't ship it.
There's like
But
there was like 4 mills that could ship for.
Yeah, well, this is one of those mills.
Yeah.
So I'm talking to them about futures, telling them that I think it, you know, obviously the board at the time was closer to 650 or 640 than it is now. And I was telling them, like, I think, you know, if you guys were in the board, that'd be smart. And basically, I was just giving my advice, tell them, you know, selling ahead at these kind of numbers, probably good price. And because that's what I was doing at the time, right? So we talked about it. Greg, you were doing it. I was doing it. I mean, I think people that hedge saw that as a good hedging opportunity. I was trying to make the case to the sawmill owners that it wasn't a good hedging opportunity. It was just a good selling opportunity. It's just a good price. And they're like, well, we don't understand how to do it. So I walked through the whole process about how it's a 4-to-1 contract. You got to buy 4 trucks and ship 1 car, or sell 4 trucks and ship 1 car. You know, it became clear to me they absolutely did not understand anything I was telling to them about the mechanisms of doing an X-pit. And so I'm going to use this short bit of time here to just plead to all the upper management and mill owner guys and hedging guys and anyone that can sell the board and ship it or buy the board and take delivery on it. If you aren't doing this because you don't know how to do it, call me. I have a lengthy email. I can show you how I did my exact last trade with the Canadian mill in July. I can tell you how I've done trades on the other side where I was the seller and the shipper. And Greg and Ashley, you could do the same thing because you've sold the board and shipped it before.
We're the first
and I'm
ones,
just
we're
one
actually
dude.
the first ones to do it.
I'm not even that smart, but I can do it, right? So if I'm not that smart and I can do it, then you can too. And I would be happy for free to teach you how to do it so that you're not afraid to use the board to your company's advantage, right? You get a few opportunities a year. You know, in any standard year, a mill gets a few opportunities a year to lock in some tremendously high dollar orders, and that don't have to be coming out of the cash market. They can come out of the futures market. Got to erase that thought from your mind that this futures thing is so hard to do. It's not. It's very simple. You just need a basic understanding of how to do it, and I will help you learn that. Call me, email me, call Greg, call Ashley. We will happily help you out. We want more participation in the futures contracts. It'll represent our market much more fully. And, you know, these mills that just don't do it because they don't know how, they need to learn how. They really do.
This is the lumber word being very self-serving at its most, because we will all benefit tremendously by having more people active in the market. It will improve the liquidity, the price discovery. So I just want to let everybody know, Matt's doing it for free. but we're going to get a big advantage if you trade it also.
It's not so much that, it's just that it's a great tool. I mean, Greg,
yeah.
you wouldn't have made it through last year without the basis trades, and neither would I.
Yeah,
Right?
no, we made more money being short futures than we did doing anything else last year.
Yeah.
And
Well,
I
what
really-
if you
and
were
I really- and I
sawmill?
really- and I really miss that. I really miss that. But I, right now, I do want to highlight for one of the segments that listens to the pod. If you are a multifamily and you have anything still to cover for this year, boy, what a great opportunity right now. The numbers have come back in a lot of cases to where we were in Q1 or are darn close and will be. And if you have stuff that was sold there, don't get too greedy. This is a good time. And to the extent that you can get some people that are interested, I mean, the prices that we can guarantee now into Q1 of next year, very, very attractive. So that's my shameless plug to help you, help me, help you, help me.
We've talked a lot. We've talked a lot about cash today. And Matt, you brought up a good point. And somebody asked me today on a call. The sell-off is big in 4-inch, right? 6-inch somewhat, but I mean, we still sold a lot of 6-inch, especially straight lengths and certain things that I feel high numbers yesterday. 8-inch, we sold whatever remaining we had on that. We don't trade a lot of 10 and 12-inch. There's not much wides coming over on any Euro boats. So it's been a big 4-inch sell-off, it feels like.
I think the market's tighter than people think, and the futures market is painting a sloppy picture. But I think, field inventories, I was just down in Texas last week. I looked around and still the same thing. Nobody's carrying much wood. Lots of plate appearances. If you hold inventory and you need to sell it, you're going to get opportunities to move it. And if you're a sawmill, you're going to have to go through the summer doldrums here for half of August, and you'll probably get a significant rally. When you get $100 sell-off in a short, violent period of time like this one, you usually get a rebound. But even then, I would say you use that as a selling opportunity for the rest of the year, because I think we're going to see, 550 is sort of a bottom here, right? It's a make or break type of number. We go below 550, you're going to start seeing more shutdowns announced, and you're going to have some problems.
Are you really? I mean, Matt, I'm not.
It's 240 mil Canadian, dude. It's terrifying.
Like the
Yeah, but they make money in yellow pine.
It takes, hey, we have logs. We have to cut those logs. We have to make that decision. And I mean, BC production is already down 65 to 65-70% over the last 5-6 years. And we have a lot of I don't know. And I was in that camp, Matt. I covered, we talked about this last time. I covered the shorts. I covered my short futures, when we went to like a $40, $50 discount, and now the market's dropped down $20 from there. I'm going, hey, where should I be a buyer of the board? And I'm like, I'm saying, hey, it's on the trend line, 560, 550. That's a good range. But then I did I kind of circled all of a sudden last year's low of 525.
Yeah.
I mean, markets tend to overshoot, right?
Oh, yeah.
I think if we go down to 525 and languish down there for a while, you will see more Canadian loss production. I think the West Coast mills are going to keep running. They've got logs. They've got money in the bank for this year. I think the yellow pine guys, for the most part, will keep running. The weaker ones that are old and antiquated, you might see some of that stuff fall off the boats.
They've already closed.
But I think that your main culprit here for the further shutdown of production would be coming north of the border, just because the math is so bad for them.
If you expired with 100 contracts long in September, who's going to ship the wood? You're going to get Hemfer? You're going to get Eastern spruce, Western spruce?
I don't know.
I'm talking
question.
no FP, not EFPN. Not going to. If you just hypothetically went off with 100 September futures, you don't even answer the phone when any brokers call you. You just say, "I'm taking it all into Chicago." and I don't give a shit what it is. You got to ship the heavy 16 tele with the exact thing. What is it going to be? Is it going to be hem fir or is it going to be spruce?
I have no idea.
God,
It
that'd
probably
be fun to try
won't be
that.
hem
So,
fir.
you
There's
know-
not a lot of hem fir production still today. If I wanted to go out and buy 25 cars of hem fir 2x4 and better, it would be really difficult.
So one of the interesting things, and Ash and I had a discussion earlier about, hey, don't compare last year with this year. Well, not gonna compare it, Ash. I'm going.
Can you do the
I'm
nerd
going-
voice again? I like, just stay in character. It's good.
I'm going. I'm going to.
It's like Slim
contrast
Shady.
it. Last year, the board held a big premium all year long, and then at the very end, it would come down to the cash market.
Yep.
Now we're in the situation where, you know, the board's been carrying the discount, did last contract and this contract it is right now. And you know, maybe we flip that switch, and what's going to happen is it's going to carry the discount, and then rally back up to the cash market, right?
Yeah.
But anyhow, I do have, you know, we this is a lot of talk about futures, and we need to like broaden our world.
Housing.
Talk about housing.
Yeah.
I mean, let's talk about housing.
Sig had some really good points to talk about coming into here.
Yeah, so to get you guys' point on the futures market, Matt, great effort to get the industry more involved in it. It needs it badly, you know, but they're just their culture from, you know, their fathers and their grandfathers. It's very difficult to integrate that culture to start looking at it more on the financial side instead of worrying about where the next 50 loads of logs are going to come from and what the cost is on those. You know, so that's the challenges you have there, that it's a very old cultured industry that's hard to change, but you're on the right track. It needs to, and it should, but it's very hard for us to convince.
Well, take advantage of my offer now, because when I retire, you're going to have to pay for my consulting fee.
That's right. Yeah.
Do we have a retirement date, Matt?
No, it's 7 to 10 years from now. It's a while,
Oh,
buddy.
okay.
I'm still having fun. I still enjoy this. We're doing the pod together. I mean, hey, I live a charmed life.
I thought I thought you were dropping a bomb on us right there.
No, I think I'll just slink away the old Irish goodbye without saying anything to anybody.
You know, nothing better than a good Irish goodbye. Absolutely.
So to get back to the housing, you guys. Also, distribution profits are very good. By the way, you're correct. You know, Universal made $1.39. They haven't made that in 3 or 4 years on a quarter. And then other distribution companies are doing well also. So because of the lack of inventory in the field, generally speaking, broadly speaking only, these distributors, if you have 4 items on a truck, you know, they can get a premium. And so the distribution profits clearly show that. As far as housing goes, you know, we had a really nice turn up in February, March, April, a little bit of May, where we had mortgage applications climbed pretty good all the way into June, and then they just fell off. And that's what we're experiencing also. We've had probably a good 15 to 20% setback since the high of June in mortgage apps. And when there's no applications, there's no sales, right? Except for a few cash sales. But those are on a smaller scale. So the majority is still a problem. We have a housing dilemma where if we lower rates, you know, everybody wants lower rates. Well, the builder's going to raise the price the minute you lower the interest rate. That part is guaranteed. If you raise interest rates, well, then they have to lower the house a little bit, right? So they're trying to keep into the same payment as we have, but it's not affordable as we see because housing is not doing well. We're selling 600,000 newly built homes a year when we used to sell as high as 1.1 million. The other scary number out there is the foreigners used to buy 274,000 homes at the peak back in whenever it was when we had cheap money. That's all changed down to now roughly 60,000. So it's dropped from the high of 270,000 per year down to 60,000. So we're missing 200,000 home sales to the foreign people that came in to invest in the United States or decided to move here, whatever the situation may have been. So speaking of that, you know, the demand is very soft. The remodeling is decent, but no upside, just kind of chucking along, as you can see, with Home Depot and Lowe's, and their stocks are down still 30% from their highs, and that tells you really what's going on. Wall Street knows all that stuff, and that's the challenge we have out there. And Greg, to your point, I don't think mills are going to shut down. West Fraser is going to make $1.59 a share. They're not going to shut down mills in Canada that I can see until they start losing money all the way around.
Yeah, I mean, like BC, everything's either shut down or been announced that it's going to shut down. I mean, they've squeezed that there's not much more left to shut down there. I mean, and BC production is an afterthought in North America now. I mean, it's U.S. West, it's U.S. South, and it's Eastern Canadian production.
Yeah.
And I'm still back to the dichotomy between how strong U.S. West production numbers are, and then I contrast that with how weak Southern numbers are, and spruce is kind of in the middle.
And there's mills for sale in the South. I mean, I can't speak of any names or anything, but there's mills for sale in the South after they had this nice little run. So the problem is 3 new pulp mills are opening up in South America, and they're going to annihilate the rest of any pulp in the United States. So,
what does that mean for lumber, Sig?
Well, the byproducts, your sawdust, your hog fuel for boiler burning, your shavings, your chips are going to be, very limited to be taken away. So they're going to have to go into pellets or other items that I don't even know about. And if you go pellets, you're going to have to be close to the coast because they're going to go offshore. So Europe has to burn 15% of all products, renewable resource, to make electricity. So Europe has to burn wood pellets by law to maintain the renewable resource structure for burning wood or coal for electricity.
Yeah. It's not good. The bottom line, Ashley, you need a place to take your byproducts.
Especially in the South.
That's a piece of money that gets factored into the cost of the log and the cost of the final output. So your costs, your mill net return is based on, how efficient the mill is, what the price of the lumber is when it's made and dried and planed and shipped, and then all your low grade and fall down materials. So that includes your number 3, your utility, your economy, kiln wets, and then your shavings, your chips, and all that other stuff that gets sold to, a Longview Fiber or somebody like that. And so, that's a bigger part of sawmill operations than the general public really understands. If you ever go visit a sawmill and you see giant stacks of chips all over the place, that's a problem. Yeah. That causes shutdowns if you don't deal with it, right? So, I'm curious. There was a pulp plant shut down a couple months ago in Prince George, and I called Reg at Carrier and I said, "Hey, is this going to affect you guys?" Because I know that does have an effect on the local mills. He said, "No, not this particular time." But will it affect if you lose more of this pulp capacity in North America? Well, then, it's going to have a downstream effect on sawmills.
Yeah, and to that point,
quick.
So you buy logs for $170 a ton. I'm going to make it in a ton so it's easy to understand. And then that log goes through your mill, and it costs you roughly $100 a ton to put it through the mill and dry. And therefore, your byproducts are now at $270 a ton cost when they come out, the side where the byproducts come out in the mill. And the truck pulls up for the chips. This is on the West Coast. And they're getting $10 a green ton for the chips. And there is 14 green tons usually on a truck. So their net return is their bottom line is $140 for every chip truck that leaves, and they're into it for somewhere around $4,000 cost. That's to point out Matt's dilemma, what he said. It's brutal what the West Coast with the chip situation is going through. And that's a big red number.
Maybe some college kid at Clemson can figure out a new use for chips and byproduct to come up with a new product that's economically viable. He'd probably be a bazillionaire real quick.
Yeah.
Hey, quick question. Switching subjects here, Matt. You had one, we were talking about this. We kind of kicked the can down the road on is it the adjustment to the countervailing duty or the adjustment for 35 to 45 to 35%?
I think Sig knows more about this than I do, but I heard yesterday that they moved it back to late October.
Yes, they delayed it. Yeah, that's correct.
And why is that, Sig? You knew more about than I did.
Well, more money in the coffer. Why do you think?
I mean, who forced that is what I'm saying, because it should have happened in August.
You know, the International Trade Commission probably got influenced by somebody that, you know.
No, it was the government shutdown. Is like the earlier, like, you know, in the year when we had a government shutdown. So then they just said, well, you know, we weren't working all this time, so we can't get it done in time. That's
Well, how convenient.
It's somewhat like sometimes things that we ask our back office for. You know, it was a holiday, so it's going to be delayed for a couple of weeks.
Yep.
Hey, Sig,
Now,
kind
did I
of
say
a
that out loud, Ashley?
hypothetical question. I came into Greg's office here and was talking about it. Was laying awake thinking about it the other day. So, like the anti-dumping, that this is just speculation on my part. So I don't want the coalition or anybody coming after me. But you know, the anti-dumping part is basically somebody saying, "Hey, you sold your lumber too cheap," right? Okay, well, and they use a mechanism. They use a index-based print to determine if you sold it too cheap in a way.
Well, they look at
right?
financial statements and they say, "Hey, you lost, you know, so many $100 million," and they go,
So why don't more
you only
people?
do that
Why don't
because
more?
you're selling too cheap, right?
So let's just make this extreme example. Why doesn't every Canadian mill just deliver everything into the futures contract or EFP it and say that we set our price based on a U.S. owned commodity exchange that you can deliver U.S. species and Canadian species on, and the price was set by speculators, hedgers, and everybody. It wasn't set by an index. And they could make the argument that the anti-dumping is out the window because we used a CME contract to set the price, and we didn't set the price, and we delivered into it.
Yeah, you're 100% correct. The challenge is when you come to my country, what am I going to do to you when you cross my border? And I know that sounds fifth gradish, but that's what really happened.
I mean, if we take the bully out of the classroom, if we take,
but
if
you
we
can't,
take,
you know. Ash,
no, but I'm saying it's like if you just,
it's like
if you got a bunch of lawyers in a room and just argued legal stuff, couldn't you say that if they used a U.S. based commodity exchange to set the price that you can deliver U.S. species and Canadian species off of, that they're not dumping anything. They're letting the market set the price. They're not setting the price.
You know,
guess what, Ash? You know what? We had a birdie tell us that the coalition's looking to increase the tariff from 10% to 25%.
Yeah, I heard that too.
I mean, you know, and this all comes back to, you know, when I had like little kids, they would say, "Well, that's not fair." And my response always was the same.
Right.
Yes, look, you're right. That's not fair.
Or the little kid on the other side that always says, "I want more."
Right.
Life's not fair. And I say, hey, and it's I go, it goes back to the golden rule. He who has the gold makes the rules.
Well, he who has the country can say what comes in and what doesn't come in.
Yeah.
What it costs to come in. But to your point, Greg, and everybody else, you know, the United States is clearly heading for manufacturing. So they're implementing all these extra costs for importers to come into the country so their local manufacturing can raise their price and build more plants because they make more profit. And that's the change we're going through. I don't care how you look at it, whether it's right, wrong, you know, yada, yada.
Fair.
What America is doing right now is they want to be in manufacturing and they don't want to import like they used to. If you look back,
it's a trend away from globalization.
Yes,
Ford just came out today and just said that they're moving the manufacturing that they have in China back to the U.S.
Yeah,
China.
Yeah, China.
God, we're going off the rails here.
Yeah.
Hey, you know, Ashley, to your point, hold on a sec, Greg. To your point, back up, you know, the lawyers and all that stuff talking about that's actually a genius idea. That'll never happen because nobody knows, you know, going back to my original point, everybody has run away from futures as though it's some
Well, they should
jigsaw
look at that.
puzzle,
They
right?
should look at that because I think you could make the argument, in my opinion, this is just my opinion, that it's not anti-dumping if I let a futures exchange set the price and I just deliver it into the mechanism.
No, I mean, if you had 100,000 trades in this contract instead of 10,000, yeah, for sure.
Yeah.
But then, you know, it would totally change our industry too. So, you know, what role would a guy that buys lumber on spec and ship rail cars, you know, buys from sawmills that he's got a relationship with, you know, that kind of thing, or even me just buying inventory to go to my reloads, or you guys doing the same thing. You would just have to go by the board and just get what you get. I mean, it would really change the nature of our industry if a lot of lumber was delivering into the board instead of just through a phone call. But yeah, it's a good exercise in your mind to think about, for sure.
I mean, and a hallmark of a really good functioning futures market is that there are zero deliveries. I mean, the futures market's not meant to be a delivery mechanism. It's meant to be a price determining mechanism.
Can you explain why?
Yeah, you could EFP then. Well,
I'm just saying is that it's meant to be a price determining mechanism, not a delivery mechanism, right?
That's why you have convergence.
It's called issuing purchase orders.
It's perfect reason in the way that they used to discourage it is, if I EFP, I get a probably $10,000 to $15,000 a better price on freight than I do if I take delivery.
$10 or $15 per thousand.
Per thousand, yeah. So I mean, you're not incented to actually shut your eyes and even when we were delivering the hem fur, we were to say, hey, let's deliver it, but the better deal was EFPing it. At the end, when it comes down to
that, Ashley, years ago, Kip had 20 cars to take delivery on to put into the basis pool. Our friend Kip, who's been on the pod many times, and he called a mill that I won't name, but a mill that everybody knows, and said, hey, we've got 20 left. We were the last ones in the board. And the guy goes, well, I'm not in the board anymore. I can't help you. So then Kip called me up and he goes, hey, what are we going to do? Nobody's raising their hands saying that they're in the board. I go, I don't know. What do you want to do? He goes, I'm just going to stand for delivery. And we'll find out who's got the wood, and, you know, they'll just have to ship it through the board, which is a terrible, painful process. Like you just talked about, lots of paperwork, more costs, more time. It's a pain in the butt.
Well, it should make the price move significantly too, right at the last minute.
Well, it was already closed. It expired, and it was like 3 days after expiration, and everybody's out of the board apparently. Well, we still long 20, and we're going to take those cars. We wanted them for inventory. And so Kip tells me, I'm just going to stand for delivery. Then I'll just tell the CME that we're just going to take them the old-fashioned way through the board, right? And then our phone started ringing incessantly for like 3 days in a row, trying to get us to EFP from the same guy that a week later earlier had told us he wasn't in the board anymore.
So he still was in the board.
Kip First liar doesn't have a chance.
Yeah.
I got a hard stop at one, guys. I'm going to have to roll off.
All right. Well, here's the end of the story is that Kip just told the guy, nope, we're just going to stand for delivery. You just have to ship them. And then that guy never did that again.
Hey, this is a big deal for the whole industry, you guys. Don't forget, you know, the guy goes to hell. He was supposed to go to heaven, and he's got hot babes, and there's steaks and bands playing, expensive red wine, and Peter calls him up and says, hey, I made a mistake. You're supposed to be in heaven. The guy goes, no, I'm good, man. I'm down here in hell, and it's great. It's unbelievable. So the next day he wakes up, you know, there's some dogs chewing on old steaks. There's no hotties. There's no band. There's no red wine. He finally sees the guy and he goes, what the hell happened? This place was on fire last night. And the guy goes, yeah, it was election day. So election day is coming up, okay? So be careful in the lumber market, because who knows what old DJ is going to come up with.
Let's end on that one. Yeah.
All right, guys.
That's a great one, Sig. Thank you for being on.
Thanks.
You bet. Bye.